Manager of Abdullah Al Mullah Auditing of Accounts, Mr. Faraz Zubair. Good morning, Mr. Faraz.
Good morning.
How are you doing today?
I'm fine. Yeah, it's a pleasure being here.
Okay, to start with, Mr. Faraz, can you first and foremost explain us what is the difference between VAT and GST?
Okay, VAT is actually a tax that is applied at each stage of the supply chain, and that generally means or whatever stage it is, whether it be the manufacturer or the seller or the retailer, each agent acts as a member of the supply chain and adds value on the product that he is selling or purchasing. So, for example, if I purchase an item for, let's say, 50 dirhams, then I entail an input VAT of 2.5 dirhams based on the 5% that I'm supposed to pay. If I further add a value of 50 dirhams to sell it out at 100, then I'm charging a tax of 5%, which is the output VAT. So the value that I've added is 50 dirhams, and that is equivalent to 2.5 dirhams. That's what I'm supposed to pay to the tax authorities. Now, in the GST, the tax is only levied at the final stage of the supply, which is to the consumer. So in VAT, it is generally applied at each stage, while in GST, it's applied only at the final stage when the consumer is purchasing the product.
Okay, moving now to the further question, can you tell me how excise tax differs from the other taxes?
Well, excise tax is generally levied on products where you want to cut down their usage. Tax authorities may apply excise taxes on goods or services where they want to cut down their usage or their harmful products. Goods such as cigarettes, alcohols, sugar-added beverages, or let's say services such as gambling, or even if you want to cut down on the highway usage. So all these things where the tax authorities may want you to cut down on the usage are generally taxed through an excise tax. Now, with that, sometimes these taxes are even referred to as sin taxes.
Sin taxes.
Sin taxes, yes.
As per your opinion, like why do you think UAE implemented VAT and no other taxes? Like they could have even implemented GST, but why UAE thought of going with VAT?
The main reason that I would say is the traceability of it. Now, once you go through the supply chain and every agent within the supply chain is acting as a member of that supply chain, then the traceability is much more visible. There's a transparent cycle of economic activities that is running through, whether it be as we said, the manufacturer, the supplier, the retailer. Each economic activity is being monitored. Okay? And hence, with all the regulations that come into play, the registration thresholds that are there, or let's say the establishment requirements, or even the archiving or recording or bookkeeping of each economic activity that you're doing, it's all traceable. Hence, it makes much more sense that you have a tax system which is traceable, which is transparent, and that's where that has an edge on the GST, because as I said, the GST is only applied at the final stage of the supply chain. Exactly.
So what do you think? Did UAE benefit by introducing this VAT, or was it the same?
Obviously, there are motives behind a new concept. VAT has obviously added value to the enhancement and credibility of economic activities within UAE. Now, obviously, the first motive is revenue generation, but let's not forget the traceability element, as we just discussed.
Yes.
Because with this, tax evasion is no longer as practicable as it used to be. You can curb on a lot of tax evasions and elements such as money laundering, or let's just say classy subsidiaries, or even cut down illegal activities just by the introduction of VAT, because economic activities are being measured at each step.
At each step.
Yeah.
Talking about VAT Health Check, what do you want to tell the audience about the importance of VAT Health Check, or do you want to tell them whether it's important or it's not?
Well, when you introduce certain laws and legislations, obviously they come at a price. Now, the tax authorities have tried to implement it's in effect, the VAT. So obviously, in case of deviations, the tax authorities have levied certain penalties where if you deviate from the law, you might be penalized for certain actions. Now, if you don't register in time, then the penalties can go up to let's say 20k,
20,000
AED. Now that's a sizable amount for any business if you don't register with the VAT in time. Other penalties that may affect your business can even affect you to the tune of 1,000 to 2,000 AED. Let's say you're registered, but you're not paying or filing returns in time, and you may be penalized up to 1,000 to 2,000 AED on repeated offences. And there might be daily penalties as opposed to or one-time charges, just because you're not paying your VAT in time. So all these, when accumulated together, may affect the size of a business, may affect the size of the economic activity that you're doing, and the penalties that may affect your business. So it's always advisable that all businesses that are currently running in UAE, they go through a VAT agent or a consultant who understands the tax process. Because there are some laws that no matter how good you are or how qualified you are, you may overlook at certain times, like things like reverse charge mechanism or cross-border supplies, or the rates that are being applied across different products or supplies. You may have overlooked them. So VAT Health Check is always a good option.
So at the end, finally, do you want to convey any message to our audience?
Well, the audience, I believe, is generally knowledgeable, but what I would like to add to whatever knowledge they possess is that when VAT has been introduced, obviously it comes with certain legislations that one needs to follow, and it's always a good idea if potential customers or clients or the audience who's having a look at the video, they go through a tax consultant or a VAT agent, seek their advice on VAT related matters, because at the end of the day, if you're not following what the tax authorities may want you to follow, or you're deviating from them, then you might suffer not only penalties, but other stricter measures, even a full screening of your records, of your accounting records. You need to maintain your accounting records for up to 5 years in general cases, and in some cases up to 15 years.
Up to 15 years.
Yes. So it all becomes very, very, let's say stringent, that where you need to be following the rules. So to me, it's always advisable that all businesses go through some VAT agent or consultant to have their VAT, reviewed.
Thank you so much, Mr. Faraz, for being with us here today.
The pleasure is all mine.
That was Mr. Faraz, the Audit Manager of Abdullah Al Mullah Auditing of Accounts, and you're watching to Audit Financial News Journal with me, Tanvi Fal dessai. I will see you next week, same time, same day. Till then, keep watching and be safe, because legacy